Hey guys, what's going on? It's your girl Megan Savage, and welcome to the second episode of my Volume 2 Quick Start Trading mini-series. If you haven't watched episode 1, definitely go do that. I'll also attach Volume 1 that I did last year down in the description. As you know, in our first episode, we talked about the importance of news in the economic calendar. And I hope since talking about that you guys are going out and actually getting familiar with it. But today we're going to cover a question that a lot of people ask when they're first getting into trading, and that is, what market am I even supposed to trade? Because Forex, futures, stocks, they're not all the same. They have different hours, different rules, different capital requirements, different personalities. And what works well for one trader might not work so well for the other one. And quite frankly, I think trying to learn all of them at the same time, which I've met people that tried to do that, me being one of them, is actually counterintuitive. It's very easy to get analysis paralysis trying to learn all this information at once. It's better to figure out which one works for you and dive headfirst into that as best as you can. So today I'm going to get into it, break down all three markets, and you are going to know exactly which market is perfect for you by the end of this video. Think about it like those Facebook quizzes that are like, which Disney princess are you? This is exactly what we're doing except trading. So I'm going to start off by saying that there's no best market. There's only a market that best suits you. This is based on your goals, your personality, just how you are and how you trade. A stay-at-home mom who only has like 2 hours in the morning to trade is going to operate and need a different type of market than a 22-year-old with all the time in the world and not so many responsibilities. A person with $50,000 to invest long-term needs a different approach than somebody who has $500 just trying to learn a skill. What I see happen often is people get introduced to trading through a specific type of community. Usually it's Forex, and they assume that's the only market available. They never even consider if it's the right fit for them. Even within Forex and futures, there's different sessions and different strategies on how they can learn to trade. So it all can be very overwhelming. So sometimes just jumping into somebody else's shoes that introduced you isn't always the best fit. So let's get into breaking down each market. So let's start off with Forex. This is the foreign exchange market, aka currency pairs. You have Euro USD, GBP USD, USD JPY. You have gold, which is XAU USD. You are trading the value of one currency relative to another. You would have learned a little bit about this in my first volume of the Quick Start Trading miniseries. $6.6 trillion moves through this market every single day, and it is the largest financial market in the world. One of the biggest selling points for traders is this market is open 24 hours, 5 days out of the week. You have your Asia session, London session, and New York session. And when it comes to capital requirements, this is where Forex shines. You can genuinely start with a relatively small amount. Some brokers let you open a live account with as little as $50 to $100. And depending on your broker, you have different leverages available. It can be 1 to 100, 1 to 200, even more in some cases. This can also be a danger, but we'll get into that. Forex is liquid, but it can also be slow depending on what you're trading. Currencies like Euro USD and GBP USD, they move in pips, very small measured movements, but pairs like gold tends to be way more dramatic. Indices like NAS or the S&P through Forex CFDs can be really volatile. And obviously this volatility depends on when you're trading as well. And as you know, the heaviest sessions to trade are going to be London and New York because they have the most volatility. I'm not saying that you can't catch a good trade outside of it, but the markets don't really move as much. So if you're a trader that wants accessibility, maybe you have a smaller capital to start with, you're someone that if they have a learning environment where mistakes on a small account don't sting that bad, this is probably more for you. I started with Forex. I still trade Forex. It gave me my foundation for being a day trader. And for most people, it's usually the starting point if they want to take day trading more serious. Next, we're going to get into the futures market. And this market is usually something that people graduate to after Forex. Not everybody. If Forex works for you, there's no point in changing something that's working. But some people tend to enjoy futures more. Futures are standardized contracts that are traded on a centralized exchange, specifically the CME. You are trading contracts that track the price of everything. You have the NASDAQ, the S&P, Dow Jones. You have oil, no diddy. So it's the same markets as Forex CFDs, but it has more transparent real data. Now the futures market is open nearly 24 hours a day, and it has regular trading hours and extended trading hours, also known as the Globex session. Volume tends to move a little bit slower during the extended trading hours, and this also causes it to be a little bit more choppy. The regular trading hours are 9:30 a.m. to about 4 p.m. EST. And when it comes to capital requirements, this is where people tend to get a little bit intimidated, but they really shouldn't, because there are also something called micro contracts. So instead of trading the actual NASDAQ, you can trade the micro NASDAQ, and it works just the same. It's just a little bit of a smaller version. For example, the micro NASDAQ, it only requires $100 in margin. Now, that being said, I wouldn't recommend starting a futures account with only $100. You do need some buffer. So I would suggest around $1,000 to $2,000. And obviously, this is money that you are not scared to lose. This is not rent money. This is not money that you owe somebody. This is money that is already gone the moment it leaves your hand. However, with the volatility, this is where NQ earns its reputation. NQ can move anywhere from 200 to 300 points a day. And on news days, it could be 500 points or more. At 50 cents per tick on micro and Q, that is real movement with real dollar value. ES tends to be a tad bit smoother. It moves more institutionally. And GC, gold, they're their own thing entirely. Big moves driven by news events, but it is very consistent if you know how to read it. Futures is perfect for the person who wants to trade during a defined session and then just be done for the day. A trader who loves volatility, loves indices, a trader who values real data. They want to see where the real volume is and maybe think more institutionally. This is good for a trader who is proven to be consistent. They want a more structured, regulated environment. Futures definitely isn't for somebody who's never opened a chart before. The leverage is real, and so is the consequences if you don't know how to respect it. A full-size NQ contract is not a beginner's instrument. The learning curve is a bit steeper than Forex, but the ceiling is also higher. And now let's go over stocks. Stocks are what most people think of when they think about the world of investing. And there's a good reason for that because it's the most widely known market. The stock market is open 9:30 to 4 p.m. and that's it. There is no overnight session. There's no weekend session. There is pre-market and after-hours trading, but the market movement is thin. Thin enough that most retail traders do not engage at it at all. If something happens in the world of stocks at 2 a.m., your stock sort of just sits there until market opens. Now, when it comes to capital requirement, this is where there is a significant limitation on the new trader. The leverage is almost non-existent compared to Forex or futures. If you want to buy one share of Amazon and it's $180, you need $180. 1-to-1, you pay for what you want to own. Now, there is something called margin in stocks. This is where your broker lets you borrow in order to buy, but obviously that borrowing costs money and interest, and the leverage ratios available are nothing compared to Forex or futures. There's also some rules in the space that create a barrier for beginners that actually want to actively trade stocks. When it comes to the volatility, individual stocks can be pretty volatile, especially during earning seasons and news events. But the S&P 500 is genuinely less volatile, though, than if you were to invest in an individual stock. But if you were to go this path, you would need to know what stock is active on any given day and do your own research into it if you were to actually go this path. Stocks are for the long-term investor, the person who's putting money away for retirement, not somebody who wants their money relatively quickly. You are holding this money for years and constantly adding to it. For active day trading, like I said, it is less accessible to beginners. However, stocks are the most understood and I want to say most accepted form of investing there is today. They work. Long term, they really do work. But for the form of active day trading that I was interested in, as well as my community and obviously the people watching this video, if you're trying to build an income stream from price movement with stocks, the barriers are much higher than if you were to do Forex or futures. Now, do what works best for you. But here is my personal recommendation. If you are a straight beginner, but you are interested in actually actively trading, I would start with Forex. The accessibility, the flexible hours, the capital requirements, this will give you the best learning ground for a foundation. As you grow, you can then start to look at futures. Like I said, you might love Forex. You might be making your bag with Forex. I would just stick with what's working. But if you did want to dabble, you now have a more solid foundation going into a little bit more volatile market. Personally, for me, I do not actively day trade stocks. I like to be in and out of the market, get my bag for the day, and compound and scale my accounts that way. I do, however, actively hold stocks, constantly investing in individual stocks or things like the S&P 500 every single week, every single month, just putting money in. That is something that I will touch later when I'm older. But my biggest recommendation is pick one and stick with one. I'm not even going to get into crypto, okay? I know a lot of people will come for me, but I do not believe in the whole meme coin dance. Sure, I do hold a couple of coins. None of them are meme coins. But like I said, my mindset is the moment that money leaves my account, it's already gone. But it's better to fill your cup of knowledge in one place before you go into another. But knowing which market suits you best is literally only half the battle. Because with each market, there is different trading styles, different strategies, and different trading personalities. You could be a scalper, you could be a swing trader, you could trade SMC, you can trade supply and demand, you could trade breakouts, you can trade support and resistance. You might be better at a fast-paced environment when it comes to trading. You might be super impatient, or you could like a more slowing mover market and have more time to make decisions. And honestly, most important, you need to know how you learn, because not everybody learns from watching videos, not everybody learns from reading things online. Sometimes you need a place to get your questions actually answered. So I have 2 gifts for you in the description of this video. One is a trading terminology Bible that I made that goes over all of the basics that you would need to know if you're a beginner in depth. It does also have some diagrams on there to help make things a little bit more visual. If you want to take that extra step and you are really, really serious about becoming a trader and you're wanting that extra help, check out the Your Trading Avatar link, and that will actually tell you exactly how you need to learn in order to become a successful trader. I've also attached my personal Telegram channel where you can go see some behind the scenes giveaways, education, and have a place to ask me questions directly if it's something that you're struggling with. If you got value from this video, do not forget to hit like and subscribe, and also turn on your notifications so you know when the next video is coming out. Appreciate you guys always, and remember, you're savage, not average, and I'll see you guys on the next video.